Hi, I'm Celeste Meyer with GVC Mortgage. Wanted to take a few minutes and explain the mortgage process and how we work with our customers to help them get a mortgage. The first step would be the sales agent would bring in an application. We would take the application from the customer, pull credit, and that's the very first step, is to deem their credit worthiness. Next, we bring the income into play and make sure that they can afford what they already have plus the purchase of a new home. The third thing that we do then is we help them to find the right property that fits their needs. So if we've determined they can afford an $80,000 house, we find them an $80,000 house. So it's all done up front prior to the customer ever going out and looking at a house. The next step then is to deem that they have their down payment or do not have their down payment. We have to have 3.5% down on an FHA loan. So if they don't have their 3.5%, maybe they have $1,000, we can do a rent to buy for say 6 months while they are in the process of getting their down payment money. Let's say they don't have the credit score that's necessary to get a mortgage right now. Well, then we can help them get trade lines, we can help them negotiate debt and pay that off, we can help them do whatever's needed to increase their credit scores. So, and then we can deem whether it's going to be 6 months, 12 months, or 24 months before they're going to be able to actually own the home outright. So in the interim time, they're writing personal checks for everything. So we have a paper trail. We're using that paper trail to help create creditworthiness, and then we're helping them get outside credit as well, if needed, to help them also build their creditworthiness. When the customer's ready, we stay in contact with them. Well, before they're ready, we stay in contact with them every month. They have to come in for their appointments. If we have debts that need to be settled or whatever, we set up appointments every month. They come in once a month, they sit at my desk, or one of the other people that's working with me, and we negotiate their debt. We check and make sure that they're not abusing their credit card that we got them, or that they are paying it on time, they are keeping their minimum balances paid down. So we just pretty much hold their hand every step of the way. Then we get back with the investor and let them know, okay, here's where we're at now. We give them a monthly pipeline report. Here's your house, here's your customer, here's where we are now. We don't pull credit every month because that's a negative. That's going to hurt the customer. We're basically just kind of maybe holding their hand throughout the process to make sure that they're doing exactly what we have asked them to do. So let's say we have someone and we think it could be 6 months, but we would tell the investor 6 to 12 months, because what if the customer doesn't perform in the exact 6 months? Plus, it's not an exact science. I mean, you might gain 40 points in 6 months, but you might have only gained 30 and you really needed 40 points in the 6 months. So we're usually going to give you a time frame. So it could be 6 to 12 months, it could be 12 to 18 months, it could be 18 to 24 months before this particular client's ready. Just depends on what they need to do. You get them in the house, you get them all ready, and we make sure that if we're using rent credits, that their rent credits are being applied monthly, that we're staying within the proper rent credits for the neighborhood, and again, that they're doing everything the way we need it done to create the proper paper trail for the end mortgage. We get their mortgage, they own the house, they're no longer a renter.